Hello, YouTube. I'm Adam Odell, Chief Investment Strategist of moneyandmarkets.com. I'm joined by my research analyst, Matt Clark, and we are back for another episode of Ask Adam Anything. We picked a really simple name. You can ask me anything, and I'll try to give you my best answer. So we have some far-ranging questions. We get them from YouTube right here in the comments below. We get them from an email address. You can email us at feedback@moneyandmarkets.com. And really, you can ask me anything, and I'll try to answer 2 or 3 of your most burning questions week after week. So with that, let's go and get started, Matt.
Thanks for having me. Yeah. The questions I have for you this week are going to range across the spectrum. It's you may be a little surprised. But I'll start with the first one. This one came in, I believe, on email, and they first wanted to say thank you for answering my question that was submitted last week. I recently became a member of the Green Zone Fortunes family, and I'm trying to familiarize myself with the information on Money and Markets website. Great question, or great thing. The question here is, as a longtime investor, it's been drilled into my head that a portfolio should be diversified into the 11 sectors in which stocks are traded, and also fill the 9 style boxes which stocks are categorized, which is large cap, mid cap, small cap, value, blend, growth, etc. If you, meaning Adam, were given $500,000 today, and you're not, but I'm going to ask anyway, how would you go about constructing a portfolio looking at the number of stocks, the sector concentration, and this has to be a portfolio that would beat the S&P 500. So that's a challenging one for you. I'll let you take that.
Sure. Well, so first of all, diversification has been called Wall Street's only free lunch, basically meaning that when you have a diversified portfolio, you can earn the same return with less risk than you can with an undiversified portfolio. The second part of this question deals with concentration. If you want to build a concentrated portfolio, how many stocks should be in that portfolio? My rule of thumb is somewhere between the 1 dozen and 3 dozen, so between 12 and 36. Anything less than 12 stocks, you're really not going to be properly diversified, and you're not going to really span the full set of sectors versus, as well as value versus growth and the other factors which we'll talk about. But anything more than 36, you basically you have a diminishing return on the benefit of diversification once you get over about 30 stocks. So just as an example, Green Zone Fortunes is our monthly newsletter. We're building a portfolio of targeting about 2 dozen to 3 dozen stocks. We have about 15 in there right now. So that's kind of the number of stocks I would look to put into a concentrated but still diversified portfolio. Now to the style boxes. I mean, this came from Morningstar, right? The 9 boxes, and the idea was to check each of those boxes. If you think about it, they talked about value and growth, and it's kind of like a 2-dimensional view of what we call factor investing or smart beta these days. And if you think about how I built my Green Zone stock rating model, we actually look at 6 factors rather than just those 2, value and growth. We do look at value and growth, but we also look at 4 other factors called quality, volatility, size, and momentum. So that's more of a 3-dimensional or even 4-dimensional view of how to pick well-balanced stocks as well as construct well-balanced portfolios. So just to give you an idea, I mean, we have, of the 15 or so stocks in the portfolio right now, we have stocks as small as 390 million market cap, 406 million market cap, 613 million market cap. So those are small cap stocks. We also have some large stocks like $35.5 billion stock, $5.6 billion, $6.4 billion, $36.5 billion. So we really kind of barbell that where we have some small stocks and some large stocks, and we do that using our size factor. We also have stocks that rate well. If you look at their 6 factors, we want well-balanced stocks. So we want stocks with an overall rating of 70 or 80 or even higher. But some stocks, they rate highest on momentum. We have 2 of those stocks, a biotech stock in the genomics space and a construction and material stock. Other stocks rate well on volatility. We have an Indian technology consultant firm that basically gets companies onto the cloud. Its highest rating is in volatility because it's a very low volatile stock and it earns great returns for that low volatility. We also have value plays in there. We have like 6 stocks in there that have value as their highest score. Those include a precious metals company, a solar company, a construction company, and 2 energy stocks. We also have 2 stocks that rate highest on quality, and those are a beverage stock and a grocery store stock, grocery wholesaler actually. And then we also have 2 stocks in there that rate the highest on growth, and those would be a precious metals company and also a grocery stock. So basically, you want to tick all of those boxes, not just the Morningstar 9 boxes, but you really want to find stocks that tick all 6 of those boxes between momentum, size, volatility, value, quality, and growth. And you can do that by either visiting moneymarkets.com, and in the top right corner, you can type in a ticker symbol and see how that stock rates on our 6-factor model. Or you can join us in our monthly newsletter, Green Zone Fortunes, where we actually spoon feed you a model portfolio of stocks that have the best balance of those. So that's a great question as far as how to find balance, but also build a concentrated portfolio. And yes, absolutely diversify across all 9 to 11 sectors, depending on how you break it up. That's a no-brainer. So thanks for that question.
That is sound advice, and I could not agree more in terms of diversification. We preach about it on a regular basis through our different videos, and I think that just spelled it out perfectly that it is important to be diversified. It is important to look across a broad range. Now, the second question I have for you, Adam, this also came via email. I appreciate your helpful video. My question is, I'm retired, and during COVID, I got a regular account to trade stocks. Now I'm finding that I must wait a year to save on taxes, and I can't trade like an IRA. What type of account is available that is like an IRA, so I can buy and sell without the tax consequence? Do I have to get a job, or is there something already available? What can I do? And this is, I think, a really, really good question, especially for those that are just starting out investing. Whether you are older or younger, doesn't matter. You're going to face these same types of situations. So, Adam, I'll let you take that over.
All right, well, I'll take that in reverse. I guess the quick answer, or the snarky answer, is if you're good at enough in investing and trading, then no, you don't have to get a job. So hopefully, you follow our advice and we can get you profitable without actually having a 9 to 5 day job and punching the clock. That's everybody's dream, right? So certainly that's the answer to that part of the question. The rest of it involves tax advice. I am not a CPA. I'm not a tax attorney. None of this is tax advice. I will repeat, none of this is tax advice. But basically, there's no way really around if you're trading in it, what this gentleman called a regular account, which is also called a non-qualified account, basically meaning there's no preferential tax treatment. You're not funding it with pre-tax dollars. There's really no way around if you're buying something and selling it within a 12-month period. So if you're not holding it for longer than a year, there's really no way around that I know of, at least, to pay ordinary income tax rates on those gains. Now, the thing is, you do net out your gains and your losses. So if you were to make $10,000 worth of gains and $5,000 worth of losses, you're really only paying ordinary income rates on that $5,000 net profit. Again, speaking all to short-term gains. One thing you want to do is, if you're in a regular non-qualified account, is see if you can find investments that you can hold for longer than a year. I mean, it's not a free lunch, but if you can get into an investment that you can hold for 13 months or longer, you can certainly get better tax treatment. Generally, long-term capital gains, depending on your income, if it's not too high, it's generally about 15%. So that's the other thing. I mean, in Green Zone Fortunes, we aim to hold stocks on the low end for 6 months. We really don't want to hold stocks for less than that. But if we can hold them for 1 year to 3 years, that's kind of the sweet spot for the 6-factor ranking model. And that's what we're targeting. So a lot of the picks we have high conviction on, and we were aiming to hold them for more than a year. And if we were able to successfully do that, then we're going to be looking at long-term capital gains. And finally, take advantage of your IRA. I mean, you can certainly, in a qualified tax advantaged account, take advantage of that for shorter term opportunities, as you kind of allude to that you're already doing. So again, none of that is tax advice. But certainly there's kind of no way around that. But you just want a mix of qualified, non-qualified accounts, as well as short term and long term gain opportunities.
Yeah, there's no way that I'm aware of where Uncle Sam doesn't take his cut when you make a profit. I don't think there's any way around that. But again, not tax advice. Neither myself and nor Adam are tax professionals. We're not accountants. We look at the stock market, not the tax side of it. So
my tax advice is to get a really good tax guy or girl and have them
get a great accountant and a great attorney.
What I can tell. Absolutely, yeah.
Now I've got one last question for you, Adam, before I let you go. And this one, I told you it was going to run the spectrum. It wasn't going to be all just one topic or another. And this one also came in via email. I love it. I think it's great. And I really want to hear your answer to it. The question is, Adam, what is the meaning of life? I'm not making that up. Someone actually sent that in. So, and I appreciate that. I like that.
Well, let's see. I think we have like 10 minutes here. So do we really think we can cover that? I don't know. I'm constantly learning and trying to figure that out myself. I would say personally, I do what I love, and I love what I do. So I think that if anybody that can do that, let your heart and your passion be the compass, whether it's in work or in life pursuits. I think that's halfway there toward the meaning of life. Another thing I live by is give everything and everybody your very best, nothing more and nothing less. So if you're giving your best, then don't hold it over yourself. If you're not, don't compare yourself to someone else. Just compare yourself to your own potential. So those are at least a couple of things that I like to live by. But like I said, that probably only gets us halfway there. If anybody else knows for sure the meaning of life, certainly hit us in the comments down below and tell us what it is. And you can probably answer that better than I can. But
and we'll collaborate on a book together to sell that out.
Absolutely, yeah. That's the fountain of youth and the meaning of life will be squared away.
Exactly. We don't have to worry about anything ever again. And I agree. My grandfather, who I admire, is probably my idol, has always told me that if you, and I know this is commonplace, but if you love what you do, you will never work a day in your life. And that could not be true. I spent years as a journalist, loved it. And now in what I'm doing now, I love it. I never wake up and wonder what I'm doing for work. I wonder what I'm going to do today that I'm really going to love. And it's always something. So I think to me, I think it's even more than halfway there. I think if you can do what you love and not spend a day actually working, then I think you're about 75% of figuring out what the meaning of life is. But everyone's got different opinions. But
absolutely,
Adam, thanks a lot for having me. I appreciate that. These are always fun to do.
Yeah, thanks a lot, Matt. And just as a reminder to everybody, it's feedback@moneyandmarkets.com, where you can ask us questions. You can also hit us in the comments down below. So certainly send us in as many questions as you'd like, and we'll hit them next week in the next episode of Ask Adam Anything.